Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So the way the show is designed is I start out the show with a lesson and then I go into the individual stock requests that came through for the week. Now the lesson, I like to see some people sending me questions about different things in technical analysis, and I can make that into a lesson. So if you think of something that maybe has to do with my methodology, you'd like a little bit of clarification on, I'd suggest sending over an email and I can try and implement that into a lesson. And the reason I bring that up is that I got a question from a subscriber and it turned into a light bulb moment for him as I answered the question and kind of helped him in terms of understanding multiple time frames. So let's go ahead and get into this agenda, because I do want to talk about this, which I think is a nice thing to share with everybody when I know that one guy who's actually a very bright guy has done a lot of extensive study and analysis for a very long time, picked up something that I think is really important about multiple time frames. And so we're going to start out and talk about how the MAs can be used as a buddy system and how I use them that way. And then what we want to do is focus in on the slope of the 18 MA. That is the key to multiple time frame trading, at least for me. And then we're also going to touch on the lower time frame and how that can help us prevent from jumping in too early or being a little too antsy when we get a pullback on the higher time frame. Then when we're done with that, we'll go through the individual requests that came through. Let's go ahead and get into this lesson now. Okay, so I'm going to use the SPY, and I like to use the SPY just like I do Friday. I give an update on the S&P and I go through the market conditions, but I like to go through the different time frames in the spider. I think it's really a great way to teach how to use price, trend, moving averages, and indicators like MACD and ADX, momentum, in conjunction, working them all together in multiple time frames. So I like to just kind of focus on the spider since most people are interested in it. So let's just look at this. And now what I want you to realize is that I have 4 time frames up, but really this time frame is not a time frame, unless you're an intraday trader. This isn't really going to be a trend time frame. This is only a trigger time frame. So we're going to focus on the monthly, the weekly, and the daily on this subject of what we're talking about. Now, what I'm looking for is a trending situation where there's somewhat of a parallel nature to the trend when it comes to the moving averages. And we can go back and look at the move up in 2021. It started in late 2020. And look at how perfectly parallel the 18 and the 40 moving averages were together. And that is essentially telling us that we have a strong trend in place. Now, the indicators can give us some early warning signs that there's some deterioration taking place, both MACD and ADX. But as long as these two lines are running parallel, you're usually in a pretty strong trend. Now, if you look at what's going on right now, the spider on the weekly actually has a pretty good look to it. And the way I like to do it is if I'm trying to determine whether it is a parallel nature, I would say that's pretty close. I mean, they're starting to get a little separated, but the reality is I think that's close enough. It doesn't have to be exactly parallel, but this is telling me there's a pretty strong trend in place. Now, I can look down and see there's confirmation on MACD and ADX, but just seeing the moving averages gives me a pretty strong comfort level that there's a pretty decent trend in place. Now, the problem with this trend is that there hasn't been any pullbacks in the area of the 18. We need pullbacks in the area of the 18 to have buying opportunities. So let's switch out and go to the daily, because when we go and look at the monthly, you can see we don't have this pattern. We don't really have anything. We don't have any slope to them. Both of these lines, well, the 40 is rising, but the 18 is basically just flat, and it has been for most of the past year. So when we have that in place, we know we don't have a trend environment. So we're looking for either this or we're looking for something like this in any time frame. So let's go look at the daily chart. Look at how since June, when this turned up, we had that parallel nature. It stayed that way for a really long period of time. And we had a couple opportunities on pullbacks with that parallel nature where you could have looked at opportunities on the hourly chart to get in as buying opportunities. Now, look at this pullback here. And this is the key. If I go back and look at this the day it was breaking, you still had a rising 18 and a rising 40. All right. Yeah, there was some deterioration in MACD, but we still had this 18 and 40 looking good. We still had a strong ADX. So this could still be considered, even here, when we confirmed by taking out the low of the day that broke the 18, we still have a rising 18 and a rising 40. So at this point, it's even though we've broken the 18 MA, it's still in play. We could still get a signal on the hourly chart and trigger us back to the upside as long as this 18 continues to be rising. I wanted you to understand this. I had a question that I think delved into this subject, as I mentioned, from a subscriber. And I think once you understand this small key, I think it'll help determine which time frame to trade. So once we move here, look at this, had another test of the 18, failed at it, and then dropped back down to another new low. Now we have 3 days in a row below the line, but look, the 18 is still rising. At this point, if we turned on a dime and we got the hourly chart to kick in and show signs of improvement, you actually have formed reverse divergence here. You see how this 18 is dropping down at a much faster rate than price making a higher low? So we still have this in place. It's still a potential trade to the upside still right now. Okay, now we go another day. Look at what's happening. Now it's starting to flatten out, although I think if you looked at it from a computerized standpoint, it would still be considered rising. So we haven't flipped down. We haven't truly rolled over. It's still in play, and we actually had an up day after a big down day. It gapped up and followed through. So this is still in play to the long side, believe it or not. And then if we go another bar, this is what ends it. This move down to this level causes this 18 to roll over. This is no longer a rising 18. We don't have a rising 18 and a rising 40. Now, from this point on, and I say this because, and I'm going to say it this way, there are no absolutes. All right. But generally speaking, when the 18 has rolled over after being up for an extended period of time, I am no longer taking trades to the upside off of this time frame. This is not a tradable time frame anymore. I'm now using this time frame and I'm waiting for this to turn and get these two lines to come together at a minimum. Now, sometimes the 18 will cross down below the 40, and sometimes they'll just come together. And what I'm actually looking for is the MACD to come back down to the zero line, and this to go to be low ADX, right? Low ADX and a zero line reversal. Now, if that takes place with these two lines coming together, then I know I have a potential setup. But I'm not looking at this as the higher time frame trade on a pullback anymore. It's not really playing out that way. This is actually more of a trigger time frame for the weekly chart. Now that the 18 has rolled over, it switches. It's no longer a trigger time or a trade time frame. It's a trigger time frame. And now the trade time frame becomes the weekly, and we're looking for a pullback in the proximity of the 18. We're getting closer. And any more of a pullback down towards this line is now a tradable time frame and a pullback towards these key lines that are rising. So, we can talk about this as a light bulb moment, as mentioned from one of the subscribers. But I think when you think about it in these terms, it's going to help you keep your time frame straight, which is incredibly important. Now, one other piece of evidence I want to mention here is on the first day that this pulled back, If we go and we look at what took place on the hourly, you see the violence of the decline. Look at how strong the ADX was based on the selling. That gives us a lot of confidence to say we're not really looking for a buy right away. It's going to take a little bit of time on the lower time frame, and that's where you don't get a little too jumpy when this thing starts to reverse back up or show signs of improvement, because we know it's going to take a little bit more time based on the selling strength of the lower time frame. So that's how all of this works together. Hope this helps. Let's move on to the stocks. If you're enjoying the content, hit that like button and also subscribe. And just briefly, my services can be found at rabilstockresearch.com. You can find my course, actually 2 courses now, which I call Trading School, and then also the individual package, which is my research. But I thought I'd mention that if you're interested in getting started to learning more about what I do, you can read my book or buy my book on it at a discount now. I have an ebook version in PDF format. So if you go to rabilstockresearch.com/book, you can find it there. Let's go ahead and move on to the stocks now. Okay, so I'm going to start out with the QQQ here. And what I want to talk about here, I think is something pretty important developing. If you look at the weekly chart, we have MACD crossing over the signal line for the first time this year and the first time in this move from the low. So we've had a couple pinches where this is pinched back, but nothing to the degree where we get this to roll over. And the fact that it's taking place pretty extended above the zero line. So what does that mean to me? I wanted to make sure I covered this because this happens quite often. We have this powerful ADX signal confirming the up move. We have MACD confirming the new high by making a new high. So we have actually confirmation of momentum on the way up. But then during the pullback, this shows overrun of the signal line. So how do I view this? Well, what I do is I respect this a lot. That's telling me that I want to keep looking at this. What this is helping me with is the timing. All right, the timing of this is telling me that the timing is something where probably don't need to play the first pullback. Most likely, if it's going to work, it's going to move up, it's going to rally up and come back down in some way, shape, or form, or it's going to work its way sideways for several weeks and do some testing here. And this line's going to keep coming down some, but this remains strong. Now, we do have DI divergence. If you've seen green DI did not confirm this last peak as well. So it's confirming what we're seeing in this overrun here. And that's the fact that, look, we don't have to be in a big hurry to play some kind of a signal right off the high, but it doesn't mean that it's rolling over and going to break down. Now, what I do when I look at multiple time frames, I've already told you and described this 18 has turned down. Now, I'm looking for this opposing trend pattern, and I'm watching MACD, I'm watching the DI lines. If you notice here, red DI has not crossed over the 25 level on the daily chart. So we still don't show a lot of selling strength in this decline, and we're coming in on support on the weekly chart. What's missing, I think, and what's going to end up taking place is this is going to come down probably a little bit too much, and we're going to get overrun here, maybe even show a little red selling strength, and we're going to need to show a little bit more of a complex reversal on this time frame to confirm what we're seeing with the MACD rolling over on this time frame. So that's what I'm on the watch out for. I think it makes sense that this actually takes a little bit of time here. This has made a really big run back up to the old high. I don't think this is ready to break out. I think it would make more sense if this consolidated, which could take place with a sideways pattern that I'm describing, or it could end up breaking the 18-week line. All right, but I'm not going into it with a preconceived notion because the ADX strength is good. I'm under the assumption that the 18-week is going to try and hold, at least on the first attempt. All right, let's go to the DIA. I think this is in a different position. It hasn't made this big move to the upside. It's not extended whatsoever. What's actually missing on this index is strength. We had a decent little breakout and follow through. We had a little up move and then a second up move, and we got a new high in the MACD. But if you notice, although green DI is making a new high, it's just barely getting above 25. The strongest periods and when you're going to see big moves and continuation is when the DI line, in this case the sellers, gets above 25 and stays that way. And in this case, we really haven't. He had a little move here and then it fell right back down, had another little move here and then it fell right back down. And I'm just telling you, consistently over time, you're going to see green DI well above the 25 line when you're in a really strong trending period. We don't have that yet. It doesn't mean that can't happen from here, but we're going to need to see that strength in this breakout and follow through for this to be an index that's going to be a leader. Right now, if we look at the relative strength of this, it's popped up a little bit, but for this to get through the moving average and show a lot of strength, we're going to really need to see this green DI on the weekly chart break out. Okay, let's look at the XLY because I got a question about this, and this is a really good case study, I think, because first of all, let's start with the weekly. We had a really nice move to the upside. We make a higher high on the weekly chart. This is a bare minimum criteria is that we're trending in price. Okay, we want to look at this first, and we are trending in price. And then in the process of trending in price, we're also confirming by a move to the upside and a breakout in both MACD and ADX, hitting new highs with price. All right, now on the pullback phase, we want to go down to the smaller time frame and determine how much strength we have to the downside. So we go here and we see we've made an A, B, C correction, just like I talked about in last week's lesson. And look at what's going on right now. Right now, the MACD is below the signal line, but below the zero line, but the signal line is above the zero. And we don't really have that much strength in the sellers because the ADX is very low. So this whole phase here, we're registering what's going on with the sellers. And the blue line is still very low, and red is just barely above. The sellers are just getting enough strength to get above 25. Not that strong. So typically what I would recommend is saying, okay, I want to buy the trend line break, right? This is the signal. It's a trigger one right now out of my course. There's 4 different triggers. This would still qualify as a trigger one. Now, if we get any more overrun or any more strength to the downside, any more continuation to the downside, and the MACD lines both cross down below the zero level, then I'm looking for something more complex. It needs to be more like that. However, in this situation, even with this decline that we've had, look at what's going on with the hourly chart. Do you see the strength of the decline? Look at how strong this decline is. Very, very strong to the downside, especially this last leg has caused the ADX to cross, and it's up at 40, and it's rising at 40. So I'm a little bit more hesitant to play this as a trigger one based on what I'm seeing on the hourly. So here's the way I look at it. If green is still in control here because red couldn't take over, right? The sellers could not take over by really breaking out and showing a lot of strength. So green is in control on this time frame, but on this time frame, red is now in control. In order to see this time frame ready to go again, I think we need to see green get going on this time frame. We're going to need to see green cross over and hold 25, get back above the red, show signs of real strength, and in the process of doing that, this should turn the corner and have at least a full-fledged 1, 2, 3. But we need confirmation from green DI now. So be careful about playing a trigger one if the lower time frame is showing weakness like this. All right, definitely an index I want to be watching for, but we're going to need to see improvement on that hourly. Okay, let's go to the next request, which was SoFI. And on the earnings, it actually had a pretty nice up move, but look at what happened. We created an island reversal where it gapped up and then had an inside day basically and then gapped down. So this I would consider to be the island, and that's pretty good resistance up there now. All right. Now, look at the other thing. You see how this big decline, how long of decline this was? And if we go and look at the hourly chart, look at how this decline has caused that's not only overrun, this is a full-fledged downtrend. And look at how strong the sellers are. So again, this can be really helpful to you when you're trying to determine, because this is actually a weekly trend trade pulling back here. And this is the lower time frame, right? This is the high time frame trade, and this is the lower time frame trade. So typically I would just be watching the daily chart, but right now this is so strong to the downside. I know I don't want to do anything until I get some improvement in green DI on the hourly. Now what's most likely going to happen is we're going to rally up and fail and then come back down and make some form of an ABC. We haven't really done that yet. So look for that ABC pattern, and then on the second decline, see if the sellers have dissipated and we don't have as much strength on the hourly. And if that's the case, we can start to look for our triggers on the daily chart. So that's how I would go about doing that. All right, look at Google. Google's in a pretty good spot here. Overall in a solid trend. Weekly is clearly in command. And as long as we hold a rising 18-week, I would stick around in this. The next resistance area is probably up around 140. We've got good momentum characteristics where the MACD is holding its signal line and the ADX is continuing to climb, and green DI holds above 25 and has been really since April. So a lot of good going on in this. I just think it's going to start to get tired as it pushes up again. I think it could push up one more time and then maybe get tired. If it can't get through, let's just point out where this level is. So if it makes another push up into the low 130, like 131, 132, and it can't get through that, then I think we probably should expect a more of a sideways pattern, because we are into this resistance zone. So it's very possible this is going to start to pull back and let the 18-month cup around. It needs to do that at some point. I'm just thinking that maybe it happens after another push to the upside. Okay, look at BPT. So the question was asked, we were talking about this big potential inverted head and shoulders pattern, if you look at this, right? But I don't like that when we're happening below the declining 18-month. You see how this is just turning back to the downside? So I'm going to view this as resistance on a rally back up. So it does have room. It does have some room right now to move up. But then I've got to figure out what's my trend time frame. I don't have it on here. We're below a declining 18. This time frame is climbing above the 18, but the 18 is still falling and the 40 is still falling, right? So there's signs of improvement here, because I can draw my downtrend line and see that I've broken the downtrend, but that's only the one in a 1, 2, 3 change in trend. We need a test here, and then this on the move back to the upside is where I'd probably get a little bit more interested. So that's what I'd be watching. Now, I know the question was asked about the daily, but I want to see what's going on in the bigger time frames. Does it look likely to me that we can get through the 40-week right now? And I would argue that I don't think that's the case. So if I'm going to play this off the daily, I have to do it off the daily and the hourly. I have to really play this tight and play for a quick move, because I don't think the weekly chart is ready to kick in quite yet. I'd actually like to see this pull back and then look for that play on the daily chart. Okay, CFLT. Now, the person who sent this over, I love your analysis. I want to make sure you know that. This was a really good job of the way you're seeing this. This is a pullback to rising 18-week. We've got good momentum. In fact, I want to zero in with this. We've got nice move to the upside, nice breakout. Remember, we want to look for price making new highs along the way. We've got confirmation here, right? Look at the volume pattern. You see these big green bars? That's real buying going on. Then we get our pullback to the 18. Now we've got a potential trade set up. So now we want to go to the weekly chart. And this is exactly what this person was looking at. And the look was, or the question was, is this the entry to be looking for? Now, I don't disagree. That's a good entry, and it's a little bit more conservative entry, but because we have an undercut and rally pattern here, you see how we undercut this low? and made a move up, and now we're testing this area. Now this is getting tested pretty strongly right now. If this doesn't turn here today and it has kind of a bad close, then what I'm going to tell you is no longer relevant. This is definitely the earliest entry you could take. But if it holds here and it turns back up and makes a little tail or something like that, then we have an undercut and rally pattern, and coming back up through these moving averages, especially if there's a big green bar or some volume or green DI breaking out or MACD crossing over. If we get any of those things that confirm that, then we have this undercut and rally pattern, and I think you could be a little bit more aggressive, and you're getting an entry right off the 18-week line. So that's the only thing I would suggest to keep an eye on. We have a low ADX condition on the hourly, so a breakout to the upside would kind of confirm, yeah, we could get going. And the breakout is probably right around that 35 area, 34.80, something like that. All right. Okay, let's look at DKNG. This pullback is the same concept we're talking about. You see how this turned down now? So this is no longer a trade time frame. This is a trigger time frame. But look at how it did it with a gap. You see the violence, you see the strength on the sellers here on the hourly. Now, this still looks fine, and we're coming into support on the 18-week. So we can give this a chance, but based on the violence of the decline, I know I'm not in a big hurry. I'm not looking to play something quick off the zero line. I think this is going to take more time. We'll have to be patient here. Now, Meta is coming in a pretty orderly fashion. We don't really have a lot of selling strength here, and we're just getting back to the zero line. What's missing is the ABC, and we might have to come up and come back down and do something like that. We still have some room to the zero line, and MACD is crossing its signal line. So the odds are we're going to come in a little bit closer to the 18-week on this one, so be patient. Okay, well, we've run out of time. Thanks for watching. My research can be found at rabilstockresearch.com, and my YouTube channel is Invest Like a Pro, and that is where I do the Friday update. Friday morning, I will give an update of the SPY and multiple timeframes. So if you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.